Thank you everyone today for joining us. This is our first inaugural Southern Colorado Commercial Brokers Association webinar. My name is Chris Myers, and I'm the Vice President of Hoffman Lee here in Colorado Springs, and I'm the 2020 Board President of the SCCB. Today's COVID-19 webinar is going to focus on the effects of the pandemic of the state of commercial real estate in Colorado Springs, as well as provide you on available resources to keep your business moving forward. Before we start, just a couple of housekeeping notes. If you have any questions during this webinar, please put those down in the chat box or the Q&A section below. That's just at the bottom of your screen. Our moderators will actually, at the end of the presentation, actually ask our panelists what those questions are, and we'll go from there. Also, please do keep your questions related to the COVID-19 pandemic. I first want to also thank all the SCC board members for their assistance in planning this webinar. It was kind of a last minute thing that we feel is valuable for all the brokers here in Colorado Springs. We're first going to start off with some brief comments from our panelists and then follow that up with a Q&A section. I'm joined today by Caleb David of Thrive Commercial Partners. He is the 2019 SCCB president and also on the board. Thank you, Caleb, for joining us.
Yeah, thanks for having us. So we really want to thank all of our panelists for being available and making this a priority to our community, our commercial brokers community. We really appreciate your expertise and your feedback as we are all navigating some unprecedented times. So just want to thank all of you guys for being here. And Chris and Jema, a special thank you for both of you for putting this all together. And also all the rest of the SCC board has really worked hard to make this available. So hopefully technology works on our side. We will do our best to answer as many questions as possible, but also want to honor everybody's time. And so we'll answer as many as we can, but the ones that we cannot get to, we'll compile all of those and try to get as many questions of those answered for you guys that we'll follow up in an email that hopefully will be a good resource for all of you.
Thank you.
And that's all I got.
That sounds great. So now we'll start with our first presenter. Actually, do you want to run through the panelists, Caleb?
Yeah, absolutely. So we're going to start off with Bob Cope from the City of Colorado Springs Economic Development Officer. So thank you, Bob, for being here. We've already got a couple questions for Bob that we'll tackle there at the end of this. Also want to thank John Goodman. Most of you were at Education Day. You know John, he's very familiar in our market. So as a attorney in this field, we value his opinion and feedback. Also, we've got Cecilia Harry, who's with the Colorado Springs Chamber and EDC joining us. And also want to welcome Downtown Partnership, Alan Armani-Munn. Alex, I know your name. Come on, Alex Armani-Munn is here with us as well. And then from the lending side, Zach Bunny from First Bank. And from Title, we've got Eileen Wolf as well as Brandon Straub. So thank you guys for being here, and let's get this show on the road.
Sounds great. For our first panelist, we're going to start with Bob Cope of the City of Colorado Springs. Bob, thank you for joining us today.
You bet. Thank you very much, and thanks, Chris and Caleb, for organizing this. Also want to thank everyone on the call or the webinar today. This is really one of my favorite groups in the community. So I always enjoy when I get a chance to visit with all of you. So as Chris and Caleb said, I'm the Economic Development Officer for the city. A little bit of background about the city's Economic Development Office. We really work in support of the Chamber and EDC as far as the primary goals of economic development in the community. And that really is centered around primary employment. So attracting primary employers to our market, to expand. My office takes the lead in some areas, and one of those areas is development and redevelopment in the community, and that's one of the reasons why I have the pleasure of working with so many of you on a regular basis, and I really enjoy doing that. You know, I wish I were making this presentation a month ago, because a month ago, this city, our economy was really hitting on all cylinders. And I could have run through all the great projects that we were working on and how we were really on an unstoppable path. And I'm going to touch on that again before I end. But today's discussion is about COVID, so that's what I'm going to focus on. First, I just want to assure everybody on the call that while we have many city employees that are working remotely, that all city functions are continuing. And of importance to this group, all of the land use reviews are happening and approvals at city planning, construction document reviews, building permits, and inspections at RBD. Those are all occurring. They're occurring in different ways. And they're, for the most part, staying up with our historical timeline of being able to get that done. One interesting note is for March, our applications for land use review approvals exceeded March of last year and was close to an all-time high. So at least we are going into this thing in a very strong position with 3% unemployment, amazing levels of investment, job creation, and consumer spending and sales tax revenue. So at least we were positioned well going into this. In response to COVID-19, the city's Economic Development Division has put together a business relief package, and I'm going to go over some of the highlights. We did this in reviewing what some of other cities were doing and just trying to come up with as many things as possible to provide immediate assistance to companies that are directly impacted by COVID. So very early on, it became pretty evident that the most pressing need was funding assistance for our local businesses that had been directly impacted by COVID, that were shut down, had zero revenue, and continued to have expenses. So funding assistance was priority one. And through great collaboration and having people step up in our community like they always do, the first major development there was the Survive and Thrive Small Business Relief Fund was set up. Big kudos to Vance Brown, Exponential Impact, and to the Pikes Peak Community Foundation for standing up a sizable pot of funds that is being deployed to our small businesses right now. And I won't go into more detail there because I think one or two or more of our guests will be speaking about that. El Paso County just yesterday has announced a small business grant fund, and that is through the enterprise zone. Essentially the way that works is that citizens will be able to make large and small contributions. You get a state income tax credit for making that contribution, and then El Paso County will set up a grant application review process, and they will get grants out to businesses that are located in the enterprise zone. So we're really happy that that is launched, and that's going to be another resource for our businesses. And I believe Alex will probably talk about what the Downtown Partnership is going to be doing in a similar vein. So again, those are the most important things that we can do as a community to get our small businesses, local businesses stabilized. The other thing that the city's Economic Development Division is doing is that we are serving as a connector, as a key resource to the other non-local resources available to these businesses. And those are primarily loan products that are available through the SBA, and also assistance to the employees and the workforce through the Colorado Department of Labor and Employment. There are unemployment insurance products that are aimed directly at and specifically at COVID. So I think that will be helpful in stabilizing our workforce. From a tactical standpoint, my office is primarily directing people in three directions. One is Survive and Thrive. The other is the Paycheck Protection Program, and the other is the EIDL loan, which has a loan and a cash advance. And again, I believe other presenters today will go into more detail on those. Some of the other things the city has done as part of the business relief package, we are providing a waiver of any penalty and interest on late payments of sales and use taxes. We are waiving any penalty for late filings for liquor licenses for bars and restaurants that are unable to submit on time because of COVID. We have essentially free parking downtown to help with our downtown businesses. Our utilities department is providing some flexibility on late payments for utilities. So those are the highlights of the business relief package, and you can view the business relief package on the City Economic Development webpage. So the business relief package is really aimed at survival. It's at sustaining these businesses through this initial period, so they'll be in a position to open and to thrive once we're able to open these businesses. So I look at this process as two-pronged. One is survival, sustainment, and the other is going to be to how do we come out of this, and how do we move forward? How do we rebuild to the extent that we need to rebuild, and how do we continue on to the extent that we're able to continue on? So right now, I think the most important need is to continue fundraising for these business relief packages. We know right now that the applications have far outstripped the demand. So the mayor's office and others will be helping in putting more money together for these business relief packages. I'd like to talk a little bit more about what business recovery will look like. And, you know, we will recover. We're the same community that we were a month ago, and we were one of the most dynamic cities in this nation. We were really the envy of many, and we were leading in so many metrics. And I know we can get back there, and it's all going to depend on how long this lasts, how deep it is, whether we just pick up where we left off, or if it's longer and deeper, what we have to go through as far as a rebuilding process. But either way, I know we'll be back. And there are certain things that are happening right now that are going to give us some momentum from the commercial real estate standpoint. If you look at what's happening at Northgate, the Northgate area with the Air Force Academy Visitor Center and the new Powers and I-25 interchange and all the work that Gary Erickson is doing there. At Interquest, we've got $1 billion worth of investment occurring right now, and that's ongoing. We've got INT, we've got Shields, the In and Out complex at Victory Ridge, and Penrose Hospital is moving forward with their $500 million campus. They just contacted us about rapid response, so that's going forward. Downtown, we have the stadium, the arena, the museum, numerous apartment projects, and hotels. Out east, we have Amazon, one of the biggest buildings in the state, and going to employ thousands. And down south, the Broadmoor just finished their expansion of their convention center. And we have rescheduled the Space Symposium for October. So we've got a lot to build on. We've got a lot of work to do, but we will be back.
Great.
So, thank you.
Awesome. Thank you so much, Bob. I really appreciate you being on today. Our next panelist, his name is John Goodman. He's a attorney here in town, and thank you, John, for joining us today.
Thank you for having me. If you're ready for me, I'll just take it away. So what I understand I'm talking about this morning are three things: commercial lease renegotiations, perhaps commercial debt renegotiations, and then contingency language that could be put in buy-sell contracts to manage COVID-19 risks. Let's talk about commercial lease negotiations. I think that brokers can provide a very useful role in bringing about successful resolutions for landlords and tenants. There are several factors that come into play in these negotiations. I want to list some of the factors because as commercial brokers, you can provide a tremendously valuable service to your client by helping your client sort of marshal the documentation, et cetera, for these different factors. So one of them is whether the lease, and I'm going to start out talking about lease, whether the lease has personal guarantees or not. Another factor is the financial strength of the personal guarantor. Imagine a 35-year-old person who was just struck out on his or her own with their dental practice. They've leased space. They have personally guaranteed the space. They're loaded up with a tremendous amount of student loan debt and debt for acquiring their practice and the like. They have not built up substantial assets. That dentist is in a very different position than the dentist who's perhaps 60 years old, who has perhaps been saving up assets and the like for retirement. That dentist who is more flush is going to have less flexibility in their commercial lease negotiations. Another important factor that a tenant has to be decisive about is whether the tenant wants to stay and continue the lease or just pull the plug and end the lease. Another consideration is the financial strength of the tenant. If the tenant was a fancy restaurant that has no takeout business, that business is shut down, that has no revenue. Very different lease negotiation than perhaps a liquor store, which is doing just fine in the COVID-19 crisis and may even have increased revenue. Obviously, a consideration is whether the landlord has alternatives, whether the landlord has alternative tenants that the landlord can move in. I want to talk about the doctrine of something called force majeure. Force majeure is a contract notion. Force majeure is just a name of a clause that could be in the lease. If there is not a force majeure clause in the lease, then the concept of force majeure does not apply to that lease or to the workout transaction. I'm not a scholar in French, but I believe force majeure means an irresistible force. If there is a force majeure clause in the lease, then everything turns on how it reads. And the force majeure clauses that I have been focusing on in the last 2.5 weeks, every single one of them was for the benefit of the landlord, and none of them excused payment of rent. I don't think tenants get much leverage from force majeure clauses. At least on the payment of rent. The tenant might get leverage on force majeure clauses on other liabilities under the lease. Let's talk about the doctrine of impossibility of performance. It's related, but it's different. The doctrine of impossibility of performance is this concept that exists in the law that hangs over all contracts, all leases, whether the lease specifies it or not. Now, it doesn't mean it's not as simple as if it's impossible for the tenant to pay the rent, the tenant can get out of the lease. If it's impossible for the personal guarantor to honor the personal guarantee, it's impossible. The guarantor can get out of the guarantee. That is not the doctrine of impossibility of performance. But there is this concept out there that if the thing that has come up was unforeseeable at the time the contract was entered into, it creates some leverage for the burden side, the tenant in a lease, the borrower in a mortgage kind of situation. And so that does create some leverage. I think it creates more leverage in leasing transactions because after all, that lease was perhaps entered into 3 years ago or 5 years ago or 10 years ago where COVID-19 was not on the horizon. I think the doctrine of impossibility of performance provides less leverage for buyers under contracts, at least in situations where the contracts were entered into, say, after January 15th of 2020, where COVID-19 was somewhat on the horizon, at least on an international scale. Obviously, market conditions are important. Another consideration is whether it's a multi-tenant building or not. A landlord is faced with an awful dilemma in a multi-tenant building because to the extent the landlord gives concessions to the tenant in unit 404, buildings talk, walls have ears. and other tenants who perhaps have less of a hardship situation might expect certain similar concessions. And so it's harder for a landlord to give concessions in a multi-tenant building. The landlord's accessibility to the courts. Right now, essentially the courts are not processing eviction actions right now, even commercial eviction actions. At least that has been our experience along the Front Range and along the Front Range. I don't have an actual tested case in El Paso County, but I would guess that is the case in El Paso County also. One of the phenomenons that we are seeing a little bit, and remember, what I see is not necessarily a random sampling, but in the subtenant situation, we are seeing situations where at least the landlord perceives that the tenant is collecting revenue from the subtenants and then not passing that revenue on to the landlord. There's a tendency to call that equity skimming, but I want this audience to know that is not how criminal equity skimming is defined under the Colorado statute. That's a phenomenon that will look terrible after the fact. Nobody will have sympathy for that tenant who is collecting rent from subtenants and not passing it on to the landlord. But nevertheless, there is not a quick, easy remedy for that. Let me move on to commercial debt renegotiations and more briefly just say that the concept of any renegotiation of a liability, whether it's lease or debt, is that the borrower is the best person to remain in control of the assets. That is, the borrower is the best bad alternative that the landlord or the mortgage holder has. And so it's all about communication. It's about gathering up evidence of the kinds of things that I just mentioned, saying, landlord, we understand your frustration. We feel your pain. We would feel the same way if we were in your shoes. And if you, landlord, or if you, lender, have a better alternative, then we wouldn't hold it against you for pursuing it. But here is why we are the best bad alternative to stay in control of the property. Last topic. I've been asked to comment on language that you can put into contracts, creating a contingency that might let a buyer or seller out of a contract due to COVID-19 reasons. And every situation is different. There is a form that has been promulgated by the Colorado Bar Association that is available for all real estate licensees to use and put it in the contract. I would suggest to you that that form was developed with residential transactions in mind, and I think it's better than nothing, but I don't think it adequately addresses the needs of most of your commercial clients. Let me give you an example. You're representing a buyer. The buyer is a special purpose entity that is buying a piece of commercial real estate. They're purchasing this real estate through 3 tiers, their own equity, if you will, that they are contributing, debt financing, and also money that they're raising from their own investors. Their own investors are getting nervous about tying up capital for COVID-19 reasons. They're nervous about potentially declining real estate values, and the equity investors pull out. Though their pullout may be due explicitly to COVID-19 reasons, that is not an out under the COVID-19 contingency clause that has been developed by the Colorado Bar Association. And then on the landlord's side, you may have, a seller's side, you might have a seller who is reluctant to close on the sale of the property, say, that you have listed, because that landlord is reluctant to or unable to close on the acquisition of a replacement property that is important to that landlord for 1031 reasons. That also is not an event that triggers the landlord's ability to get out of a contract under the COVID-19 contingency promulgated by the Bar Association. There is not one way to do these things. What's sauce for the goose tends to be sauce for the gander. In other words, to the extent it creates outs for buyers, wide open outs for buyers. It creates wide open outs for sellers. There's tension because we want to protect parties from defaults from scenarios that they did not cause. But on the other hand, we don't want to destroy the gluiness, if you will, of the contract. And your transactions are big enough that it might be worthwhile for parties to create the contingencies case by case with their lawyer. All right, I've said enough. I am grateful that I've had an opportunity to participate in this. Thank you for being generous with your time. I will stop talking and see if there's any questions for me.
Absolutely. Thank you so much, John, for joining us today. I know you have a limited time today. Was there any questions, Caleb, before he has to jump?
We don't have any questions that have come through the Q&A section for John specifically, but one I have seen a lot more on the residential side, John, is the notion of no showings whatsoever. So wanted to see if you could maybe speak to that. There's a lot of open interpretation and a lot of people's opinions out there. What would you say on the commercial real estate side that we should be doing or should be considering for showing or not showing property?
Yes, I just had to tell my wife, yes, I did get the trash out today. Okay, so sorry for that breach of professionalism. All right, so yes, this is a hot topic in the residential world. You can imagine the dilemmas that our leaders have in creating these things. On the one hand, they don't want people to be killed. On the other hand, they don't want to kill the economy. And so they're doing their best they can to address these things. And yesterday, there was a position that came out from the Colorado Division of Real Estate that used a phrase that the phrase was something like this: showings must be avoided. It did not say showings are prohibited. It said showings must be avoided. So there's sort of a wonderful ambiguity as people wrestle with those two tensions that I just mentioned. Here, I think there's some pretty hard and fast rules. One of them is in the residential side, no open houses. Now, I don't imagine that there are open houses too often on the commercial side. But I know that in some communities, the organizations that are analogous to the SCCB sometimes have meetings that are hosted in properties. So, for example, say Chris had a listing on a warehouse space, and he wanted to get eyeballs into the space. He might host the monthly meeting at that warehouse. Don't do that. Don't have a gathering like that. So that's easy. Here's another concept. It's definitely not business as usual regarding showings. It's only business on an emergency kind of basis, is the way I would put it. And the emergency is not your emergency to pay your own mortgage payments, your own rent payments. The emergency would be the client. So for the client who is going to be kicked out of their building and needs to find an alternative spot in which to move, if it's client driven that the client wants to get into the property, then I do think that there is wiggle room for you to get the client in the property. But don't send out marketing, don't send out literature, don't convey them, hey, business as usual, there's great deals out there. If you want to get in the properties, I'm the guy to get you in there. Because that's going to look bad after the fact.
Yeah. Thank you, John. We've got a couple more questions that have just come through. One of them, I'm not sure if you can see the one from Bobby, but wanting to know if you're seeing frequent use of pre-negotiation letters. For example, no one pulls the trigger on default remedies until the end of the COVID emergencies, but all rights are reserved.
Let me clarify that just a little bit. Are you talking about preemptive letters that come from the landlord? If you don't know, let me tell you what I have seen. I think it's relevant even if it's not exactly responsive to the question. And I am now opening the question voice or the question box. But let me tell you what I have seen. I have seen letters that come from tenants, and these are tenants who have multiple properties listed in the spirit of protecting the innocent or the guilty, depending on which side you're on. Imagine a franchisee, a restaurant franchisee. That's not what I've seen it from, but imagine a restaurant franchisee that has 7 locations in the community. So I have seen letters like that go out from tenants to landlords saying, "Here's our plan. Here's what we're going to do." What do I think about that? Well, on the one hand, no problem with that. It's a good way to start communication. But what's going on in the case that I have seen is it's just a pretense of starting communication, because the tenant who sent those letters out then goes radio silent when the landlord contacts the tenant and seeks information that is relevant to put the work out together. So from the key from the tenant's perspective, the key from the debtor's perspective on a mortgage is to communicate with the landlord. Communication is key. Be transparent. Get all the information out there to help the creditor, the landlord, or the mortgage holder understand that you are the best bad option.
Thanks, John. I'll give you one more. The question is, could you offer insight into non-refundable earnest money portion in a purchase contract where the buyer now says he doesn't need to release the earnest money because everything is now different due to COVID? So now buyer's unwilling to release.
Okay. Well, so there are different scenarios of this, but let's talk about what may be the most common version of this scenario. And let me just close one of the windows here so I can see if my hands are in the view frame. So the deal went under contract. The deal was born on day 0. Time is moving this way. I'm going to step back so I can have a little bit more room here. There's the contingencies, inspection objection and due diligence documents objection, and all the contingencies have passed. And so the earnest money has gone hard as it can go under the real estate commission approved contract. And then for whatever reason, COVID-19 related, the buyer cannot close, and the buyer refuses to cooperate with signing off on the earnest money release, which inhibits the title company from sending the earnest money back to the buyer. Well, the buyer has leverage. It doesn't mean the buyer will win that dispute, but the buyer has leverage. The buyer does not have leverage under the real estate commission approved contract because of force majeure, because there is no general force majeure clause in the real estate commission approved contract. The real estate commission approved contract has section 19, and section 19 of the contract is talking about floods and fires. I think it's quite a stretch to argue that section 19 helps a buyer in that scenario. But the buyer has leverage for other reasons. One of them is this doctrine of impossibility of performance. And so, for example, if it was a contract that was entered into in September of 2019, the impossibility of performance leverage becomes stronger. Another reason the buyer has leverage is just due to inertia. The title company is not going to release the earnest money to the seller without the buyer's signature on an earnest money release form authorizing the earnest money to be released to the seller. And so the seller in this situation, the seller is the one who's trying to change the status quo, extract the earnest money from the title company. The seller is going to have to initiate a lawsuit and the like. Before the seller can initiate that lawsuit, the seller is going to have to go to mediation. And so, if I'm a tenant in those situations and cash is king and I want to grab onto anything I can, if I'm a tenant or if I'm a lawyer for a tenant, I'm going to tell my tenant, you've got an uphill battle, but you do have some cards to play that we might be able to use to, say, get half of your earnest money back later. We're sorting through those things right now. It's very much case by case.
Right. Awesome. Thanks, John. We did get a couple more questions for you, but we'll follow up with you later on those so we can move it forward. Just John.
Great.
I will stay on until 10:50.
Great. Thank you so much, John. Really appreciate that. Our next panelist is Cecilia Harry from the Colorado Springs Chamber and EDC. Thank you, Cecilia, for being on today.
Hi, thank you. Hello, everyone. Lots of folks on this webinar that I have not met yet that I'm looking forward to meeting here in the coming months in person when we can like shake hands again and be in the same room and that sort of thing. I'm newer to the state. I'm newer to the Colorado Springs area. I'm an economic developer by training, and I've practiced in several states in the Midwest before making my way to the Pikes Peak region. So I'm excited to get to know this group much better in the weeks and months to come. I wanted to just emphasize a lot of the things that were shared by Bob earlier in the panel related to not only the city, but El Paso County, the Chamber and EDC that I represent, Visit Colorado Springs, Pikes Peak Workforce Center, lots of different community partners in the Pikes Peak region are working together to better understand what's happening with the business community in this region, trying to make sure that we have comprehensive relief programs that are meeting the needs here in the short term for companies across industry sectors, especially our smaller businesses that tend to struggle more significantly during disaster periods like this. And then also planning concurrently so that we can embrace recovery. We don't know a lot about what that looks like, but there's lots of conversations happening about what reentry can and should look like and when, what indicators we need from a public health perspective, what the needs of the business community are, and how we help reintroduce not only workers into the workforce with employers, but then customers and meetings, events, that sort of thing. So what we've done as the Chamber and EDC in this space recently, we coordinated with the partners I mentioned and several others to put out a business survey that we closed. It was open for about 5 days, and we closed it on March 23rd, which was a couple days before the governor's stay-at-home order. And so much has changed since that order went into place, but we learned a lot of information, primarily from food and accommodations and recreation, arts, and entertainment industry, but also the catch-all umbrella of professional and technical services. So many of those industry categories that I just mentioned are very much clients of yours and folks that you're interacting with on a regular basis. And so we heard across those industry sectors that a dip in customer base, event cancellations, and tourism decline were their biggest concerns at that point in time. And then you can infer, though, that if they're having problems with customer base or anticipating issues with events being canceled or there being fewer tourists in the area, that's going to have financial consequences. So that goes back to what Bob shared in terms of these community partners putting their heads together to make sure that there were good resources available quickly financially to help provide some relief here. And there's kind of two waves of relief that we're in at this point in time. We have some local programs that I'll touch on that are here to hopefully react more quickly than our federal programs are able to. The federal programs that have rolled out through the CARES Act are monsters, they're beasts. These are really big programs, and they're having to process applications across the country. So what we're trying to do is make sure that we have some local resources to help businesses in the short term, and then hopefully they can layer federal resources on top of that. So I have a bunch of resources to share. I'm going to touch on them high level, and then I will paste this into the group chat so everyone has these different links. We had someone who asked a question about how to help direct a client toward federal related resources. And so we have a really robust SBDC, Small Business Development Center network in the state of Colorado. And our Pikes Peak Small Business Development Center works very closely with the state office to develop content and roll out resources. So I'm going to share the info page related to disaster relief for the Pikes Peak SBDC. But just because you or your client might not be in the Pikes Peak region, maybe you're in part of the maybe South Denver or a different part of Southern Colorado, the resources on that SBDC info page for the Pikes Peak region are the resources that the rest of the state are pushing out as well through their SBDC avenues. I also have a link in there for the state SBDC website, and there's an interactive map where you can look for the county where your client is located, and you can direct them to that local office. There are 2 hotline numbers that I will share, and those are not regionally specific. So we are encouraging businesses to just connect directly with the SBA for navigation and clarification on items. Again, these are really complicated programs, and information is changing so fast that you could finish a webinar and have new information an hour later. So we're really encouraging folks to just go straight to the sources, which are your SBDC network, and then these hotlines through the SBA. Other important tools and resources that I wanted to cover, there is a state COVID relief fund. It is geared more toward the nonprofit community that are providing services to families here in the short term. In terms of relief related to disaster, work disruption, that sort of thing. But that might be a tool for your client depending on their tax status. There's also some good resources related to workforce unemployment. I'm going to list the Pikes Peak Workforce Center website there. I'm also going to list a link to that Survive and Thrive program that Bob mentioned. That is a fund with the goal of raising $5 million in the Pikes Peak region to help companies as small as 2 employees up to 25 employees get immediate relief of up to $25,000. The application process is pretty simple. I'm on a team of really talented, dedicated folks that are burning the midnight oil trying to review these applications and make recommendations so that those dollars can get out quickly. Over $500,000 went out to businesses this week. So that is great news. Again, we're not hearing consistently what the approval process is looking like and what time clip folks can expect for approvals from federal programs, but that's awesome that we're able to do that here in the Pikes Peak region, and I'm really proud to be a part of that group. I'm also going to share the Colorado Springs Chamber and EDC info page and the info page for the City of Colorado Springs. And then my understanding is that the group will also receive a copy of the business survey that I mentioned. You're welcome to take a look at that, glean information from it. Contact me if you have additional questions. We're hoping to check in with the business community here in the coming weeks to see how they're doing with what else is going on. And then to close my comments to what Bob was saying, like, we will rise again, we will be okay. Absolutely. There's kind of 2 things to keep in mind. One is that this is not a geographically specific disaster. So what we are experiencing and struggling and trying to figure out in this part of Colorado are same questions that are being asked one state over, major metros like Denver and Chicago, smaller communities that are adjacent to larger communities. So it's not that we are at a disadvantage yet compared to other parts of the country. I say yet because recovery and reentry efforts are going to be critical to that. My prediction is that the communities or the regions that try to anticipate different scenarios and plan as best as they can, not only for reentry, but for what a potential pullback could look like if we see recommendations from a public health perspective that we do need to go back to more extreme social distancing. That's where I think we're going to see communities emerge more strongly or with a competitive advantage. And I know there's lots of leadership in the Pikes Peak region that's committed to figuring that out. The other piece too is that we have our infrastructure in place. We have our roads, we have our utilities. People can get to and from, goods can get to and from. We don't have that physical component of a disaster with a flood or an earthquake or something where buildings are compromised or destroyed and our infrastructure is compromised. So those are really good things that I'll point to. We will figure this out. What the rule book is or what the playbook is, we don't know quite yet, but we can learn a lot from other natural disaster experiences that we've had here in Colorado and in other parts of the country with disaster preparedness in the Gulf and that sort of thing. And then a little nugget of good news, how Bob was saying that, we've been positioned well nationally in the Pikes Peak region. We still are. We just got word of a new ranking where Colorado Springs ranks #1 for IT graduates. And so that's great news for how we're going to be able to sell the good things going on in our community and how that translates to people needing to hire folks in the area and have workspace in the area. So those are my comments. Looking forward to hearing what the Q&A is, and I will post those resources here in the chat feed so you have those. Thank you.
Thank you so much, Cecilia. Appreciate you. A couple of quick things is if anyone does have any Q&A questions, please put that in the Q&A down below at the bottom of the screen, and we'll answer those at the end of the panelist round. We are running a little bit behind on time, so I definitely encourage everyone to stay on as long as you can. If you're not able to actually watch the entire webinar, we will have this available on the SCCB website, but I'd say stick around. We have some great stuff coming up as well as the Q&A. Thank you again, Cecilia. Our next panelist we have is Alex Armani-Munn from the Downtown Partnership. Alex, thank you so much for being on today.
Yeah, thank you, Chris. And thank you, everybody, for participating today. I understand with the current situation, folks are likely extremely busy managing affairs with all their clients. So again, thank you for taking time to join us today, and hopefully this information is helpful for you all. So I'll start with a quick overview of the Downtown Partnership and talk a little bit about what we're doing at the moment and what we're seeing. And I will try to be brief in the interest of time and allowing for as much Q&A as possible. So first, the Downtown Partnership is the lead organization championing a strong and vibrant downtown. Our family of organizations consists of 2 nonprofits as well as 2 special tax districts. So through that family of organizations, we're able to do public space improvement, marketing for downtown. We leverage tax increment financing. We do public space management. So again, anything that really creates a strong, vibrant, healthy downtown to anchor our region, we do it. So with that said, in the current situation, some of the things we're doing, a lot of our work at the moment is really focusing on marketing and communications. So at our website, downtowncs.com, we have a page up right now called Support Local. That page lists all of our downtown businesses, specifically street level, that remain open for online business, carry out food or delivery food. So again, that's downtowncs.com/supportlocal. I believe we will be sharing that link. In addition to that, a couple initiatives that we're really excited about. We actually had a virtual First Friday last week that generated over $20,000 in art sales at some of our local galleries. We actually just announced a new partnership with Penrose St. Francis as well, where we are coordinating bulk orders for our frontline staff at Penrose St. Francis with downtown restaurants so that folks can order dinner or lunch at the hospital. And there's actually a link we'll be providing where folks can go on and donate that. So if you want to buy a meal for, again, our frontline healthcare workers, what's so great about this program is it not only supports those folks that are doing the most important work right now, but it also supports our downtown restaurants when they have these bulk orders that they can plan for. It lets them know what inventory to keep, and it also gives them a good cash infusion to really make it through this time. So in addition to that marketing work, again, as I'm sure folks are aware right now, communication between landlords and transparency is just so critical. And something that's really kind of unique about downtown is that we have a lot of property owners and a lot of landlords who they're not professional landlords. They're not professional real estate people. They maybe inherited their property through family. So, this is really new for them. And there's a greater need, I think, now more than ever for the support of our brokerage community to help these folks to really understand how to navigate these challenging times. So we're on the phone every day. I do have to give a lot of credit to my colleagues, Laurel Perdome, Katie Hartshorn, Susan Edmondson, and others at the partnership. who are constantly in communication with our businesses downtown, as well as our property owners, to ensure that folks are having those conversations that will allow them to plan and really adapt to what's become the new normal. So I am happy to announce that we will be rolling out our own financial relief program next week, specifically targeted at locally owned street level downtown businesses. What I think is great about this program for the city as a whole is that it'll help relieve some of that stress on other resources, like the county's program being rolled out through the enterprise zone, as well as the Survive and Thrive program. If we ourselves can help a small business downtown, that frees up dollars from another program for another business in the city. I can't provide too many details on that program right now because we are awaiting approval from our Downtown Development Authority board before that program goes live. If you are a Downtown Partnership member, you will receive information on that, more formal announcement via our newsletter next week. If you're not a member, you should be. You can visit downtowncs.com to learn more about that, but there will be a press release. So for anybody with clients downtown, support is on the way. And I will echo what Cecilia and Bob said. We're certainly right now very much in the response phase of this crisis. So the program we'll be rolling out next week will really be just our first wave of support, whether it's months from now or weeks from now. We will also be rolling out financial relief to really focus on recovery. So with that said, I'll talk really quickly just about what we're seeing in the market. First, I'd like to lead with the good news. And again, this echoes much of what Cecilia and Bob said. Big picture, this city is in a great position. Downtown as a submarket is in a really great position. We would have done our State of Downtown event last week if it wasn't for the current situation. So unfortunately, we weren't able to share a lot of those figures, but I'll share some of the numbers now that we're seeing from our most recent State of Downtown report. First, obviously, retail and restaurant are the most impacted by this crisis. With that said, we ended 2019 with a retail vacancy of 3.8% downtown. That's historically low. And I'll also note that of that 3.8% vacancy, a lot of that vacant space was space that was actually being repurposed and remodeled. And in the process of construction, was attracting a lot of attention from local and regional brands. So there was really, really high demand for restaurant and retail space downtown. Something else that's really exciting is that even in the midst of that hot demand for retail and restaurant space downtown, we had some of the lowest and most competitive retail rents in the city. So we remain confident that when this passes, this is still a place that people want to do business. With that said, another thing we were excited about was at the end of 2019, we had 4 times more new business announcements than we saw in 2018. So we expect a lot of new businesses to open throughout the year. And again, what's really encouraging is as we engage with those folks who are making plans to open new businesses, they are forging forward with plans to open businesses. On the construction side of things, as Bob mentioned, our hotel projects are going forward. Our larger attractions like the stadium and the Olympic Museum, while opening the museum may be delayed, construction continues. And on the multifamily side, we saw the delivery of about 600 new units between 2016 and 2019. And we have a pipeline of nearly 1,300 more units that are either under development right now or have been announced. With that said, I had 2 phone calls this week with national developers who, again, remain bullish on this market. So we know that when the dust settles, this is still a place where people want to build, people want to invest, and people want to do business. So we're really excited about that. With that said, we're certainly very realistic about what the outcome and what the impacts of this crisis will be. We're certainly hoping for sunshine, planning for rain right now. As I mentioned, we do expect retail to be the hardest hit, so we will likely see a spike in retail vacancy this year. But we're confident in the network of resources that exist both locally and federally, so that when the time comes to get businesses open again, I think we'll see a lot of demand and a lot of leasing activity. Leasing activity was actually really strong coming into 2020, both in the office sector and retail downtown. I'd also love to share something else I was really excited about. In about mid-February, we got sales data for downtown, and our retail and restaurant sales in the downtown core were actually 12% higher in January compared to last year. So we were just in our stride. And last thing I'll share in that regard, at the end of 2019, we had about $187 million in gross sales within our business improvement district. So that represents the area really from Moreno up to Boulder Street between Cascade and Nevada, what's really our commercial core downtown. This was about a 10-year high for, again, our retail and restaurant sales downtown. To give a little context, we were just starting to reach our pre-recession levels. In 2006, we had about $200 million in gross sales in that same area. So we were certainly on an upward trajectory, and this will be a bit of a setback. But again, we're confident moving forward that we'll come out of this stronger than ever. So again, I'd just like to reiterate, visit our website, downtowncs.com/support-local to see businesses that remain open, doing delivery services and online sales. Keep an eye out next week for our press release, information, our newsletters regarding our own financial relief program. And to the extent you can, please support our downtown businesses. They're our bread and butter. As you all know, sales tax revenue is critical to the success of our city. In downtown, being just 1 square mile, we generate about $7 million in sales tax revenue for the city each year. And that's about 7 times higher than the citywide average per acre. So a strong, vibrant downtown isn't just important for that 1 square mile area, it's important for the whole city. You know, love our businesses. We're in this together, and we'll get through it. I'm gonna leave it there for now, again, in the interest of time, but certainly happy to answer any questions via the Q&A. Also, my email is alex, ALEX, @downtowncs.com. So I'm always happy to talk a little bit more offline as well. Thanks so much.
Great. Thank you so much, Alex. Appreciate it. Our next panelist we have is Zach Bunny with First Bank. Zach, thank you for being on.
Thank you. As Chris just said, my name is Zach Bunny. I am a commercial lender with First Bank here in Colorado Springs, and I'm going to talk about kind of 2 key issues here today that some of you may be facing either as property owners or certainly on the brokerage side. The first is kind of payment deferrals and a few key pieces there, and then I'll kind of jump into the PPP loan program and fill you in on what I can, at least from a high-level perspective on that program. So leading in with payment deferrals, I think the first thing that everyone should understand is that there is not a legal mandate or a one-size-fits-all approach to this. This is an issue that each individual client, whether they be a tenant or a landlord, has to address with their banker. And what I will say is talking to bankers around our community and certainly at a national level as well, the banking industry has, in my personal opinion, done a very nice job of stepping up and ensuring that we work with all of our clients through this time frame. So what I want to say about payment deferrals is that there is a degree of consistency between what different banks are doing, and the initial feeling is that the majority of banks are kind of looking at this crisis as we understand it today as about a 3-month issue. And so most lenders, and again, please understand, not all lenders, are offering up to 3 payment deferrals. And what that essentially means is it allows a landlord or a business not to make their payments for 3 months. What it does not mean is that those payments are forgiven or that interest is not accruing. I think that's a critical issue, and I've read a lot of different opinion articles and things out there, and there seems to be some confusion over that issue. But when you defer a payment, different banks are going to handle it different ways, but the most common approach to a payment deferral will be to not require a payment, continue to accrue interest, and then ultimately the maturity of your loan will get extended on the back end as you make up those payments essentially. Other approaches to payment deferrals, perhaps after the deferral period has ended, your lender may add the interest that accrued during that period to your principal balance and then re-amortize it over the remaining term of your loan. Another approach might be to give you some specified time period to make up those payments. But the important thing to understand is that in all cases, a payment deferral does have some degree of cost associated with it, and so it's important that people understand that, understand what that cost is, and are asking their lenders those questions. Having said that, again, I know the banking industry can come under fire for different reasons at different times, but I do understand almost every lender out there is ready to work with their clients to get through this together. And I think it's important that this group understands that the banking industry at large is healthy, and the banking industry is prepared to, sorry about that, to step up and help folks through this time. Switching gears, let me jump into the PPP program. So the payroll protection program was rolled out as part of the CARES Act and obviously has seen absolutely overwhelming demand. You know, hundreds of billions of dollars have already been authorized, and I know banks are working extremely hard, quite literally 24 hours a day in First Bank's case, and I'm sure all the other lenders are doing similar to manage the sheer volume. Just so that this group audience understands that volume, and it's a pretty telling statistic. The SBA has gotten more loan requests authorized in the last week than it does in a typical year. The dollar amount of disbursements associated with this is larger than the entire SBA portfolio as it stands today. So it's huge, and lenders, through no fault, by the way, of the SBA or the federal government, are really scrambling right now to lend billions and billions of dollars with about 1 week's notice on getting this out. And again, that was great that the federal government got this out, and First Bank, and I know the banking industry as a whole, is excited to be a part of it. Very, very quickly, let me go through the high level. We can do a little Q&A, but I don't want to get too deep into the weeds. But essentially, the way the payroll protection program works is essentially a small business, 500 employees or less, obtains what their average monthly payroll is over the prior 12-month period. That average monthly payroll is then multiplied by 2.5. That will result in a loan amount. So the example I like to use is if you pay $100,000 per month in payroll, you would get a $250,000 loan amount. Over the succeeding 8 weeks that follow the origination of that loan, there are essentially 3 qualified uses of those dollars. Most importantly, payroll. It's imperative that you retain your employees and keep those employees on payroll. That's the purpose of the entire program. You can use it for mortgage interest, not to be confused with principal and interest, mortgage interest or rent, and then it can be used for utilities. At the end of the 8-week period, you will submit a request for forgiveness of that loan, and provided you have utilized all of the funds for a qualified cost, that loan would be forgiven by the federal government. Should there be a residual balance, a portion of the loan that is not forgiven for a variety of different reasons, that loan would be on a 2-year term at a 1% interest rate. So that's the high level. I am certain there are questions, and I'm here to answer those questions, but it really is a powerful program that the federal government has rolled out, and I know there's mixed reviews of banks right now in the media, and I understand that, but I do want everyone here to understand that the industry as a whole is working extremely hard to roll out a very, very big program in a very, very short amount of time, and I do think we will start seeing dollars hit business accounts. And I probably better be careful to say, kind of speaking for First Bank here a little bit, by late this week, early next. So really a very impressive turnaround time, and I think the industry as a whole is working really hard to get these dollars into the hands of the small businesses that need it. I'll kind of leave it for there and pick it back up when we get to the question portion.
Great, thank you so much, Zach. So if anyone does have any questions for any of the panelists, please put those in the Q&A below, and we'll get to those at the end of the panelist group. Our next presenter we have is Eileen Wolf with Heritage Title Company. Eileen, thank you so much for jumping on today.
Great, hi, thanks everybody. As Chris just said, Eileen Wolf with Heritage Title, and I currently sit on the SCCB board in the membership role, in the membership chair. I just wanted to share a few of the adjustments that title companies have had to make due to the coronavirus. So the majority of the changes we've had to implement are with the physical closing of the transactions. While minimizing our customer contact as much as we can, we are now offering alternatives to the traditional sitting around the closing table. And being electronic documents. We're sending out electronically as much as we can. We're also doing curbside closings and utilizing external mobile notaries. And when permitted by the banks and the lending institutions, we're doing video closings. As far as the title commitments, there haven't been many changes there that you should see. We're continuing to do electronic recordings, which we've always done. So therefore, we can still ensure the gap period. Another item is, of course, our priority is always keeping you and your clients' funds very secure. So we strongly suggest that you do all wiring of transfers. The buyers wire funds in, and then we can also wire out the seller's proceeds as well as your commissions. Just keep in mind that we do not share wiring instructions via email. We will only provide those verbally, so we need you and your clients to call and obtain those, or as well as give us their wire out instructions. So, you know, some title companies have different procedures, so I just, suggest that you contact whatever title company is handling your transaction at the time to see if they have different guidelines and policies. So that's about it. I'm going to let Brandon jump on and share a little bit more.
Awesome. Thank you so much, Eileen. Our final panelist we have before the Q&A session is Brandon Strawberry of Land Title.
Strawberry.
Yep. Thank you, Brandon, for being on today.
Thank you, Chris, I suppose. And thanks to all the prior panelists who have spoken. I think, looking at our industry and the times we're in, it's incredible the support we have locally, state level, and federal. Listening to it's exciting news now, listening to that the downtown is going to be looking at pushing out some monetary relief. We have it at the city level and then at the national level. So hopefully these are all, from our prior presenters, these are all tools that can go in your bag there as brokers to help you negotiate during these hard times with these present deals that you're working through and renewals, and trying to not only keep landlords going, but keep those businesses going as well, and keep everything healthy. So just to expand a little bit on what Eileen said, what we're seeing right now at Land Title is out of respect to the stay-at-home order and minimally exposing our employees and our customers at Land Title. 80% of our workforce is operational out of their homes at this point, where right now what we're seeing in office are just that closing staff required to take care of that present need to close on transactions. And as we see shifts or get later in the month, that number obviously increases a bit. I also just wanted to take a couple minutes to talk about a couple things that in a little more detail. One being recordings and gap coverage, and then the other being just kind of clarifying, what closing capabilities are out there, and what you could start asking your closers for and your title company for. First and foremost is that the latest information I have received is that in every county in the state, we are still e-recording. What this means to you guys is that when your properties, your clients' properties close, those closers are still able to record or send those in to be e-recorded. And then this will, as Eileen mentioned, allow for the underwriters on these title commitment policies to ensure that gap period. What you can check with your title company and your closers and your title department is what that looks like. So always, it's great practice to review that latest revision of your title commitment or your client's title commitment, just to see as things can change over the period of time of a transaction, what can change. And obviously there have been quite a few changes over the period of time for these transactions that we're in the middle of right now. So make sure that you have diligent practice in reviewing those requirements to close and those exceptions to that policy when you close, just to make sure that nothing has changed in regards to the current situation we're in with COVID times here. Also with that, digging in a little bit, touching in the weeds without jumping fully into the weeds here on closing capabilities. Eileen touched on a few, but all title companies right now are in best practice of trying not to be a spread and keep everybody and their customers and everybody safe and healthy in these times. So what the state has done is temporarily allowed for virtual notarization. So what you can do is call your title companies and see if this is something that can be handled, or if a transaction could be a potential candidate for a virtual closing. What that allows notaries to do is record a signer of documents and receive back those originals, and then physically notarize those original wet ink copies, and then submit those to be recorded. There are many nuances, and this is not a perfect fit for all transactions, but it's definitely worth talking about. Also, just to provide a little bit of clarity on RON and remote online notaries. This, while not technically allowed in the state, there are out of state, and there are a couple providers and a couple vehicles that can allow for remote online notarizations. What that is all signatures are digital and the notarization is digital. And this is something that I would encourage you to dig into very, very deeply. All parties of the transaction, to include the lender, need to be very comfortable with this, as it's not common practice right now, but it is something that if it comes up or a client asks you about it, just to have a little bit of ammunition to at least go back to your title company and have an educated conversation to find out more. And then, as Eileen stated, the curbside closing has become common practice, and for most of us, we lean on that because it is the closest thing to getting everybody physically in a closing room to conduct a traditional closing while still having access to your agents or your lenders via your phone in your car to be able to answer any questions when you're not present. So hopefully that allows a little bit of information there to help you out and clarity as you guys lean toward closing here and utilize all these other tools to hopefully keep some deals coming in during these crazy times. Thank you for the time.
Great. Thank you so much, Brandon. Do appreciate it. So now we'll roll into our Q&A section. We have a couple questions, it looks like, but if anyone does have questions, just please put them down below the bottom of the screen where it says Q&A, and we'll get to those. For these questions, I'll rely on Caleb for these. So Caleb, thank you so much.
Yeah, absolutely. So the two questions that just came up are probably more directed towards Zach. So one of them, the first one, Zach, is that a lot of brokers have CCROM, and the question was, do those qualify for the SBA PPP program?
Yes, let me I had a bit of a bad connection there, but I think was the question, do brokers that accept their income as an independent contractor through their C Corp, S Corp, LLC, do they qualify? Was that the question?
Yes, sir.
Okay. Yes, they do. So beginning today, actually, independent contractors, sole proprietors, single member LLCs are able to apply for relief under the Payment Protection Plan. There is a $100,000 cap associated with that. And what I mean by that is annual compensation. So if you work for a larger brokerage house, and then that brokerage house pays you as an individual or as a again, a single member LLC, S corporation, sole proprietor, you are eligible for relief. You would again take what your actual compensation was in the prior 12-month period, or the $100,000 cap, whichever is less, and then divide that number by 12. Multiply it by 2.5, and that is the amount of relief that you would be able to receive under this program. Same parameters for forgiveness as any other business.
All right. Thanks, Zach. The other question that is for you is, what's the availability of those funds? Do you see those funds still being available through the next few weeks?
That is a wonderful question. I believe that they will be. The initial $350 billion, or 349 if we're going to be precise, probably will get exhausted over the course of the next few days or week here. But it is our understanding, both publicly, based upon sort of media commentary as well as through some internal channels that there's, relatively speaking, pretty good bipartisan support to increase the amount allocated to this program by an additional $250 billion. So at this point, I certainly understand the urgency that we're experiencing from customers, and I don't think there's anything wrong with getting your applications in sooner than later. But I do believe that the funds will be there for some period of time here. So I wouldn't think panic is necessary at this point. I would say that given the sheer volume of these requests that we're seeing, and I touched a little bit on that, what I would encourage you to do is go talk to your bank. I think the industry as a whole has kind of committed that, hey, we need to take care of our existing customers first. And so please begin the dialogue with your bank, figure out what their process is. I understand some of the larger financial institutions are phasing this a little bit more in order to try and be as efficient as possible, and I can certainly understand that, but begin the dialogue, figure out when it'll be available, and I do have confidence at this time that the funds will be around for a little while and hopefully adequate to meet the demand.
Yes, I would just add that.
Exact. One last.
This is Cecilia. I'll just add that we're hearing from the SBDC network the reminder that in previous disasters, the SBA has never run out of resources. So there consistently has been support for making sure that there's enough funds for the small businesses affected to be able to access them.
That's great. Thank you. One other just note that this is from one of our panelists. So just so everyone who's listening knows that in order for businesses to take advantage of partnership, so this is for any business that is part of downtown, whether or not they are part of the downtown partnership membership. So wanted to pass that along to you. And as of right now, we don't have any other questions, and we know we've gone a little bit long. So just wanted to thank again all of our panelists. We know that you guys are scrambling, and lenders, I know, you guys are definitely doing so much. SBDC, Chamber, title companies. Thank you guys for the us and the resources and taking time today to just kind of keep us on track. So thank you, and I'll turn it back over to Chris.
So thank you, Caleb. So there will be a recording of this Zoom call that we had today available on the SCCB website here, hopefully this afternoon. So all that up so you can grab all that. We do have a couple dates coming up. Our May 13th luncheon, we did cancel that luncheon. We're going to reschedule that, and we'll send that date out to all the members. We do have our June 15th luncheon coming up, as well as on August 17th, we do have our annual golf tournament. So make sure to sign up for that. It'll be a great time. I appreciate Weldon for all the work he's been doing with that, him and I believe Tony. From there, visit our website, mysccb.com, for more events, all the programs, everything you're looking for. And as always, let us know if we can help with anything at all. And thank you again to all of our panelists. This was a great impromptu last-minute webinar, so appreciate everyone. And thanks to all the attendees for joining, and we'll let you get back to your Friday.
Great.
Thank you, Chris.
Thanks, everybody.
Thank you, everyone.